So my talk is entitled From Side Hustle to Full-Time Freedom. I'd like to just gauge a little bit in the room who we've got and who's employed, who's working for themselves and who's got property, just so I can get a sense for who's in the room. So who's actually working in a job employed at the moment? Okay, so we've got a few people there. And how many people are self-employed, work for themselves? So that's a bigger number, interesting. And out of everybody, as who in the room already invests in property? So at least got one property that they rent out. Okay, anybody got more than 5? Okay, cool. Thank you very much. That just sort of gives me a little bit of an idea. Now I'm hoping that this device is going to work. It is. So I'm going to give you just a little bit of background at the moment because I know there's a couple of people in the room that know me. So hello, Eamon. Hello, Neil. So I'm just going to go through a little bit about me and my background. I began working in photography in 1992 and I started working for myself in 2005. So I worked as an employed photographer for 10 years before then taking that experience and working for somebody else. So there's a lot of benefits in working for yourself, but actually it's really, really good if you can learn how to run a business by working for somebody else. And the thing that really benefited me was that I ended up working for somebody that was a master at business. So the photography was great, but actually to have a good photography business, just like anything else, you need to be good in business. And the same obviously applies to property. It's all very well having a passion for property, but unless you've got a passion for the business side of it, then you'll essentially fail, or you'll struggle, let's say. So in 2005, I was working out of a second bedroom in my property, seeing customers in my living room. And I thought, this is no good. 6 months went past, I thought, this is crazy. We've just not got enough room. So we moved in 2006 to a bigger property where we actually spent quite a bit of money doing a refurb and putting a studio in. We converted a garage. So I started to learn a little bit about let's say, how to manage a sort of a change in a property, let's say. And at that time, I kept my first property, the one that I bought. And interestingly enough, I had a look back in 2006 to see what the interest rate was. And it was actually 3.75%. So at the time, it was pretty much what it is now. When we rented that property out, the mortgage was costing about £600 and the rent was about £650. And that was before the days where you had to have this rental cover. But obviously the play on the fact that I kept that property wasn't for a rental income because I was busy doing photography. My play on that was for a long-term sort of wealth thing, and that I would keep it and use it as part of my pension play. It's interesting what Halstead was saying earlier about vetting people to be diamond members, because I used to go to a networking event that didn't vet people very well, and I met a letting agent. And anyway, long story short, I ended up putting a tenant into this property, the very first tenant I ever had, and they ended up completely destroying the property. I had to get a court order to get them out. All that horrible stuff that you hear, it happened to me first. It does put you off, but if you can get through the struggle and understand how it works, then you definitely don't make the same mistake again. So we moved in 2006, having spent a load of money on the property. We moved in 2010 because the property that I was in at the time, it was all right, but it was on a housing estate. I was running a photography studio, so getting parking and working from home was a little bit tricky. So we decided, and that was one of the very few houses that I've ever sold, was that one, because it was in let's say we were selling it in 2009. Well, we all know what was going on at that time of year, that era. So we put it on the market and we only really got what we paid for it plus what we spent on the refurbishment. So we kind of got our money back. It did actually mean that the property we bought was actually pretty reasonably priced when you compare it to today's standards. So why property? I've got a good job. Now that I'm working for myself, career opportunities, why not just stick that money in a pension? Well, it was actually my old boss that said to me that she had been paying maybe for 20 years, 25 years into pensions, and she did allow me to put some money in the pension through the company at the time when I was working for her originally. But the one thing that always stuck in my mind was that she just said, property will do it for you. She had some property of her own, most of which was unencumbered. So that was kind of the reason why I decided that I wanted to go down that property route. rather than just putting my earned income or some of it into pensions. I get presented with this book. My brother actually gave it to me, interestingly enough, in 2011-ish, which was called Rich Dad, Poor Dad. And I do believe I had it for a while before I read it, but I did read it. And then I answered a Facebook advert. Do you remember the days of Facebook? I don't know if you remember all those years ago, where they just used the adverts which just appeared on the right-hand side. So in the middle was all your content from all your friends, and you never had any adverts down the middle bit. It was just a bit on the right-hand side. And I saw an advert for a 2-hour seminar. Anyway, I went down to that, and they upsold me to a training course, and I did this training course. And although I haven't got an awful lot to say good about that training course, it did make me go out and start to buy property and start to build a portfolio. So I had basically built up quite a large amount of savings, which I just didn't know what to do with. I was earning the money, working hard, in a trade, doing pretty well at it, and I just didn't know what I was going to do with it. And that was when I read the book. And interestingly, when I went to that course, I came out of the course, which I did 2 months after I moved into this property, and then realised that I just spent a whole deposit on the stamp duty that I bought for the property, because that was before they changed the levels. So I think it cost me £20,000 in stamp duty back then in 2010, when they hadn't changed the bands. It was, I think if it was 3 or 4%, it was on the total rather than that tiered thing that they changed it to. And I thought, that could have been a deposit for a house. As mentioned, my goal was to replace and exceed my photography income through property over a period of time. I didn't necessarily have an end date to that goal. It wasn't like a 5 or a 10-year goal. It was just, that was kind of what I wanted to do. Incidentally, I reached the goal by 2016, and I was actually doing it fairly slowly. I think if I'd have really put my mind to it, I probably could have, well, I know I could have done it a lot quicker. But when you're running a full-time business, when it's just you and your partner, I had a couple of subcontractors, the time just seems to disappear with so much to do. 2020, we had COVID, and that was really the time where I knew that I'd done the right thing in property, because I was able to survive without having to go to work. I had money coming in from the portfolio, and I didn't have to go to work anymore. A lot of my peers in photography were having to go out and get other jobs just to put food on the table. I think it's important to know that you can still do property alongside whatever you're doing, whether you're working full-time or whether you're in a trade doing something else. I mean, Steve was talking earlier about his business, and he's going to be a landlord in a few weeks' time, hopefully, when he completes on a property that's probably going through. I would say absolutely 100% that this is one of the best ways of investing in property. There's a lot of strategies, a lot of talk said about buying with no money down and lease options and all these kind of things, which are great if you have no other option. But if you have an industry or a job that you love, then there is absolutely every way that you can do this, and you can actually do it fairly quickly, quicker than I did it, I believe. Is it easier just to earn more money rather than saving and all that kind of stuff? So obviously, in buy-to-let in particular, you have to have deposits to buy property, yeah? I'm not sure what the average price of a 2-bed property is in Ipswich. It seems pretty good. I think the yields are not bad. I mean, perhaps you could enlighten me whether you think that's wrong, but I think Ipswich as an investment area is pretty good. You really need to just work out how you can find more money for deposits. So for those people that were working and that would work for themselves, is there anybody in the room that, are they doing something that they don't like? So everyone's quite happy doing the jobs that they're doing, and everyone's quite happy doing their own thing that they've done in terms of working for themselves. They're quite happy with. That's fantastic. So you need to try and find out a way of just doing the same thing but for more money. And sometimes, even if you're employed, you can even stay in the same industry, even doing the same job, but just by moving from one company to another company, you can actually execute a pay rise there. But people just get set in their ways, right? Work for the same company, or they don't even go and ask for a pay rise. Do you get your pay rises annually? Or are you just expecting? I always used to think, I deserve a pay rise. I must be having a pay rise on coming up, and it never did. But the minute I asked for a pay rise, I always got one, because I was good at what I did, and but without asking, then you never get. So you've got to get outside your comfort zone, challenge yourself, go and see your boss, ask for more money, or move industry, or maybe work your way up the ladder in that same company. Can you start a side hustle? A lot of people do photography as a side hustle. A lot of people work in a corporate job and do photography on the side. Trouble is that sometimes they don't really know how to run a business, and then they end up doing photography, and they don't quite know that it's more important to run the business rather than just taking nice photos. You actually need to know how to do it as a business. But can you set up this leave work perhaps? Does it have to be in property? You can be interested in property as a wealth building strategy, but it doesn't necessarily have to be something you do day to day. So you're doing your heating business, which is great. I'm sure you've got, did you say you've got a team of people?
Yeah.
Yeah. So you've built up a business over a long period of time. You've got a lot of trusted customers. You know that you're always in high demand for what you do, and you're using that income that you're making from that company to invest in property, right? Yeah, fantastic. That's my ethos all over, really. That's what I'm into. Once you've made this decision to raise some more deposits, what should it be? Buy-to-lets, HMOs, service accommodation, something else? I do a little bit of all this. So mainly buy-to-let. I've also got some HMOs which are professional HMOs. My stuff tends to be more geared to the blue-collar market, so the ones that take a little bit more work. I think I was talking to somebody else about HMOs who said that they did nice HMOs, which meant there was less work, which I kind of agree with to a point. Or service accommodation. I spoke to a young lady earlier. She said that she was doing service accommodation, and that's great. It's a lot of hard work, a lot of hospitality. You know, that is a real sort of customer service-based type business to do. I mean, I would say if you're starting out, you know, for those people that want to build something, I think, you know, single buy-to-lets are usually the safest option, particularly if you're earning money doing something else and you want to do, let's say, sort of a low intensity type strategy. Do you know what I mean? If you're doing something which is where you've got to manage a lot of tenants and you're busy doing something else, it can be quite difficult to do that, unless you're going to bring somebody else in to help you do it, of course, or using a letting agent perhaps. The most important thing is that it needs to fit your goals, and so what I tried to do is to work out what I needed to cover. And when I got more confident in what I was doing on the buy-to-let side, then it gave me confidence to then go ahead and do something like a HMO. So my first HMO that I bought was an already existing property that was a HMO. It was 5 rooms, and I think there was 2 tenants in there at the time. There was 3, one which I had to remove because he decided that he wasn't going to pay the rent. So that was also a learning curve for me, asking somebody to leave. So property needs to fit your goals. So as mentioned earlier, if you're busy over here doing this thing, then maybe go down the sort of buy-to-let route. Keep it simple. If you want to go all in, then HMOs might help you to replace that income quicker, or down the service accommodation route. So my strategy, changed over time. It got to a point where I wanted to completely replace my income and actually make some more income. So I decided to buy more HMOs and convert properties into maximum 6 beds. So we have got a 6 bed that we spent quite a lot of money on. I was listening to a podcast not so long ago. It was talking about leverage, and the interesting thing about that was that they were arguing whether or not property investment actually worked and stacked in terms of the numbers if you don't use leverage. So does anybody think it's a good idea to buy properties with cash? Oh, good. I'm obviously in the right room. Yeah, so leveraging everything is generally a great idea in order to make sure that you are getting the maximum. What I thought would be really interesting is if we have a look at a couple of case studies, and what I really wanted to do was to talk to you about the very first property that I bought. This was in 2012. So my investment area is Thetford. I'm not sure if you've heard of it, but it's sort of 30 minutes south of Norwich. Probably about 35 minutes, 40 minutes from Cambridge. Now, in 2012, it was a bloody nightmare to get to because they didn't have that A11 trunk road, and whenever I used to go and view properties there, I always got caught at Elvedon, and I always had to ring the agent and say, I'm going to be late, but I'm coming, I'm definitely coming. Properties were pretty cheap there, so I bought this one, I'm going to show you some pictures of it, for $91,000 plus fees. Now, back in those days, there weren't any stamp duty. So this was, you could buy property, there was no additional stamp duty for landlords, and if it was under 125,000, I think there was no stamp duty. You have to factor that in now when you're buying stuff. We put the deposit in of 25%, and the interest rate was 3.75% at the time. You know, pretty much what it is now, yeah? Although the house prices have gone up, admittedly. What can you get a 2-3 bedroom house that needs a bit of a refurb for in Ipswich these days? Anyone? 180? Yeah, it's quite a lot higher, isn't it? Mind you, the rent will be a lot higher than what it was then. So at the time, the refurb was about 10,000. I think probably these days it'd be more like 20, 25, I reckon, if we did the same amount of work to it. So the current market value of this now in 2025 is around about 210,000. It does actually need a bit of work doing to it. So if it became vacant, I put it on the market. I think if I did it up and made it nice, it would probably be more like 230, maybe 240 at a push. But the important thing was that we remortgaged it in 2015, so 3 years later, with 103,000 roughly advance from the lender, which of course, as you know, is paid for by the bank. The great thing about these properties is that when at the time you're buying them, and at the time I bought this, I thought I'd spent a lot of money on this. It was on the market for 95. The agent phoned me in because they knew that I was looking for a property and said, there's a sale fallen through on this property. Would you like to come and have a look at it? And, we basically need someone to fill that sale. So I went ahead and looked at it and I thought, well, I'm not getting, after the property training courses had said how much below market value you should be getting discounts for, I thought 91,000, well, it's not great, £4,000 off the price, but I had to start somewhere and it seemed like a good, but I had no idea that it was going to go up in value over this period of time to this amount. I'd never thought at the time that's going to double in value, even though history tells you that it does. Just trying to get your head around that, particularly when you're starting out, is quite surprising, really. All the money back out of the deal for me to start again. I think we've got some pictures here. So this is what it looked like. It probably looks worse than it was. I mean, decor obviously not great. We needed to put a new kitchen in. We needed to put a new bathroom in, do a little bit of work in the garden, but we turned it around and made it look pretty respectable. Magnolia was the colour that I always did everything. Wouldn't do magnolia now. But yeah, Howden's kitchen, new bathroom painted all white, vinyl flooring, pretty nice carpets in. We didn't have to change the boiler. We've only just recently changed that boiler, an old Potterton back boiler, which the plumber that I was speaking to the other day said, oh yeah, you could easily get 50 years out of one of those. I mean, you wouldn't get 50 years out of a boiler that you put in today, would you? Would you? No chance, no. 50 years old that boiler was before we changed it. So yeah, so we still own this property today. I'm going to show you another little case study because that last one we did a little bit of work to it. So maybe it took us a couple of months. I can't really remember. So this one, the only thing we've really done on this since then, we did put a new kitchen in recently, and the doors were changed, but not initially. So we rented it out as it was. So this was in 2013, and this was bought for 87,500, including all costs. So that would have been for the solicitors as well. Again, value of the mortgage, you get the idea. So the agent said to me, who sold it to me, I said, so what we're going to need to do to this? So we're going to need to repaint and put carpets, da-da-da. He said, no. He said, that'll be fine. That'll just rent as it is. And I said, are you sure? He said, yeah. He said, we'll advertise it and I'm sure we'll get a tenant in there, no problem. Anyway, so the tenant looked around, moved in. He's been in there ever since, the same guy, the same family. So the current market value of this one is about 185. We've got a doubling in value there over the time. That's my alarm to put the bins out. Must be Monday. And in 2016, 3 years later, we refinanced to take out 95,000 from the lender, which obviously pays for the original purchase and then money in the pocket. Now, I know a lot of people that want to do buy, refurbish, rent, refinance, all that stuff. You're trying to do that in a very short period of time, preferably 6 months. It wants to be 6 months, so you've got a good choice of lenders to lend to on those deals. For me, it wasn't really that important for me to recycle it that quickly. I sort of had that I was really busy at the time working in my other business. So it wasn't a strategy where I was trying to snowball it up really quickly. And so therefore you can afford to wait for that for that growth to happen, and also for refinancing. So again, another free house eventually, and we still got that today. This particular chart shows you that 12-year history of that property. And the reason why I'm showing you this is because property is not a short-term thing. Okay, you can build houses and sell them. You can buy houses, do them up and sell them on. You can flip them. My strategy has always been buy and hold for long term. And I think that this shows that you can have a really, really good investment and using leverage on this property. So there's no money left in this property at all in 12 years. And the money was taken out after year 3. So once year 3's done, we're immediately on an infinite return on investment. So not only is it doubled in value, not only do I not have any money left in the deal, but the profit over the 12 years on a simple buy-to-let property is 62,000. Now I think that's pretty good. I think that's for not having to do much work. So what we've done, I think we've replaced the kitchen, replaced a few doors, maybe put an ECIR test on it, those kind of things. I reckon for those of you that are buying a property next week or whenever it is, you look back in another 12 years' time, and I think you'll be pleasantly surprised and pleasantly pleased that you would have bought that property and see it go up over time. I mean, obviously, nobody knows what's going to happen over the next 12 years, whether it will be the same. But I think if you use leverage and you buy wisely, so you buy property that you can get a little bit of a discount on, then I suppose at the time I wasn't really looking for massive discounts because I wasn't trying to force the value quickly. I was just trying to build a portfolio over the long term, building wealth, being busy over here doing this job, and then putting the money that I was earning from that into that. So that's kind of what I've done through that process. I suppose it's where you're feeling challenged or you are busy over there doing something else, or you're tied up with the fact that you think that you can't do this because of that's happening. Well, if you get up and you always do the same thing, then you're always going to get what you've always done. So you really need to make the change happen. So I went back. I was looking for something in my calendar, and I've used digital calendars for years, right? And I went back in my calendar to around about 2012, 2013, and I looked at the calendar, and I could not believe how much I was able to fit in the day. You know what they say? If you want something doing quickly, ask a busy person. I mean, Christ, I was busy, and I was still managing to get out there and do viewings, in the evening times. But unless you're prepared to put in the graft to do that, then you'll always get what you've always done. Replacing the income. As I mentioned earlier, in 2015, I bought that first HMO. So we were really on the way now to replacing the income. In 2016, when those changes happened with the tax regime, we started chucking everything into a limited company. So what would I say about limited companies? I think you really need to look at what your situation is, what you're earning in your earned income, whether it's employed or working for yourself, and then work out whether or not your first 1, 2 or 3 properties need to be in a limited company, because chances are they might not. So you need to run the numbers on that. You don't always have to, but if you're intending to buy or to build a portfolio of like maybe 10 properties, then I would say it's a very good idea to have those in a limited company. But you could have your first 1 or 2 in there. And what about the hassle of HMOs? Ooh, I could tell you some stories about HMO management, especially with blue-collar workers. Yeah, they are a lot of work. They give you a good return, but you have to put the effort in. And I managed all mine myself. I think basically people will often talk about the hassle of HMOs, and my answer was never that it was necessarily hassle, but it was more work. So my view was, if you wanted to earn the money, you have to do more work. If I wanted to earn more money taking pictures, I had to take more pictures. I'm not going to earn more money by not taking pictures. So I'm not going to earn more money if I'm going to have a HMO, but I can't just sit back and think it's going to be a single let scenario, or that it's going to be easy. So yeah, a lot of lessons on property management learnt there by managing HMOs. Commercial buildings. So I was presented with an opportunity a few years ago to buy a commercial building, which I in the end decided to buy. I didn't actually buy it with a mortgage because at the time the valuations for commercial property seemed to be very expensive. So you couldn't get a free valuation from a lender. And also the lenders would only lend typically around about 60% loan to value. So I decided to buy it with cash. And at the time, with the tenants that were in situ at the moment, it was yielding around about 12% with the tenants that were in there at the time. So I thought that was quite a good investment. I thought it was quite a good property. So still haven't put a mortgage on it, but I've now completely filled that property. So it's like a HMO, but for small owner-managed businesses like nail technicians, beauty therapy. I've got somebody in there that does that sells model aircraft parts, that sort of thing. And it now yield on purchase price is around about 22%. So I've obviously probably pushed the value up a little bit there on that property. But I mean, what a great investment that was! Absolutely brilliant. So yeah, a little bit of diversity there in the portfolio. I have actually looked at some more commercial stuff. I'm quite interested in buying some more commercial stuff, not to do commercial to resi, but just to keep commercial, because I think that it's a good way of diversifying your portfolio. But I'm not really sure whether I'd start with it, because it requires bigger deposits and, again, a little bit more difficult to finance, particularly if it's from an investment perspective. There we go, Richard.
What would you have done differently if you knew then what you know now?
I think I probably just would have gone a bit quicker, and I would have put a bit more effort into allocating a bit more time to doing viewings. I mean, that's the biggest thing, is getting out and actually looking at property. Because what I found later on is, the more you go to the estate agent and you say, I'm looking for this, I'm looking for this. No, that one's not so good. No, not that one. Or I'll put an offer in, but that's not accepted. What happens is you end up annoying the estate agent to the point where when you speak to them on the phone, they go, we're going to find you a property. We will find you something. And then something comes up and they go, right, we're going to make sure that you get this one. I'm not sure whether you've ever had that experience over there. I was chatting to an estate agent earlier. But I think if you regularly keep in touch with your agent and they know what you want, or even if they don't know what you want, but you go and you keep making lots of appointments, they're going to want to find you something. And they're going to want to work with you. So the more viewings you can do, even if it is just to build the relationship with the estate agent, you're far better off building a relationship with the estate agent doing viewings than you are just asking them to take you out for a green tea. Sorry, Helston. I think time management would probably be one that I'd like to revisit if I could.
Wouldn't we all?
Yeah. Yeah, so good question. It's Eamon.
What are you looking to do next?
Commercial's good. I'm also working with some people who I've known for a long time that I've got a very good relationship with, where I'm lending funds to. So that works very, very well for me at the moment as well. I think it's just diversity. Trying to get your head around something different's hard though. You know, I'd quite like to get my head around crypto, but I'm sort of like my property guy, you know, it's quite difficult getting your head around something else.
Did you say you've taken on a manager to do some of your properties for you now?
I did. So in March, I basically managed everything myself. I think there's one block of 3 flats that I've got that's always been rented by the agent that sold it to me, just because it was quite an easy way to buy it. There was already tenants in situ and whatnot. But everything else, I've managed myself. And it was getting quite busy doing that, especially with HMO changeovers and whatnot, advertising the room and doing the viewings and doing all the communication, all that sort of stuff. So in March I took somebody on to do that part-time. So she does for me 15 hours a week. She used to be a letting agent for another agent. She's worked in the industry for 10, 15 years, very, very experienced. And I pay her 15 hours a week, but I say you need to be able to do those 15 hours whenever is required. So if it requires you to answer a tenant in the evening on a message, then it will require that. If it's required to go and do some viewings in a property in the evening, then that's going to be required. But one week might not do anything. So you might have a week where you don't have to do much.
Do you still pay her for that?
Yes.
You do, yeah.
Yeah, so I just pay her a fixed amount so that she knows she's got a regular income. That was one of her things that because I kind of encouraged her to go self-employed. I said, look, you know, just go self-employed, then you can work for other people. And she does inventories for some local agents as well. So I check in with her regularly, and you know, I still do some of the management. Yeah.
Thank you very much. When you took her on, had you already written your systems and processes, or was it still very much in your head, or did she come with systems and processes?
Oh, that's a good question. She had used systems before, and because I'm a bit of a control freak, difficult when you're trying to take on a member of staff, is I basically changed my systems and processes to suit us both. So I basically set up a whole, we pay for all of our email comes through and handled by Google now. So she's got everything that is to do with our tenancies is all within Google Drive and Google. So the calendar is operated in there. All the documents for all the tenants all the stuff that she needs to do with the tenancy. And in the mortgage stuff, I don't bother putting that in there, but all the tenancy stuff is in there. Email is then in there as well. So that now I can just choose to either log into it or not. And to manage our HMOs, we use a bit of software called Coho, which you may be familiar with if you know HMO management software. It's not brilliant, but it's better than most. And then we use OpenRent for all of our single let stuff. So she's now, even though we've got a lettings person, we still use, OpenRent's brilliant. I'm not sure whether anybody's used it. Even if you don't manage your own stuff, even if you have someone that helps you to manage it, OpenRent is just fantastic. It's very, very seamless. Everything's built in, really, really good. So yeah, that's great for that kind of thing. So in answer to your question, some of it was already set up, and the rest of it we set up purposefully so that we knew exactly where both of us would be, because she works remotely. Most of the time just talk on the phone.
Great, thank you.
No problem.
Yeah. We're about to put like a buy-to-let on OpenRent. OpenRent's purely just for finding the tenant, is it? Or
No.
checks as well? And ongoing management? How far does OpenRent go?
So how many people are not familiar with OpenRent? Not familiar. Okay. So OpenRent is essentially a lettings platform for landlords.
Right.
That allows you to advertise the property on Rightmove. Mm-hmm. That's a very important
that's what I knew it for.
point. Right. They have what's called a rent now purchase option, which allows you to basically find the tenant, talk to the tenant within the portal, so you can communicate with them by message. Mm-hmm. And then once they've been to see the property, you can then say, right, yes, fill in the application. They can do the the reference checks. Yep. You can do your own reference checks if you like, by using another agency, but their agency is very good. Yep. They use open banking to check their income. And then they can also offer, if they meet the criteria and your tenant is a green light, when they've done all the checks, landlord check, whatever other checks you want to do, they can then offer you landlord rent guarantee insurance at the same time. And then when they create the tenancy, which they sign electronically, so everything that needs to be served to the tenant is all served electronically, and when they sign for it, it has a descriptive part of the back end of the AST that says that all of those documents have been served and that they've been received. Yeah. And then the only thing that you've got to do physically really is to check the tenant in and give them the keys. So whether you choose to do that yourself or whether you give it to somebody else to do. And then ongoing to that is that you can pay them £10 a month to collect the rent on your behalf. So what that means is that the tenant pays it into an OpenRent bank account, so that OpenRent can keep a track of when it's coming in, and then they deduct that £10 and then pay the rest to you into your bank account. And the great thing with that is that OpenRent will then email the tenants immediately that there isn't a payment in. Yeah. You can set it to have all your reminders for gas safe and all that stuff.
That's Coho as well, does exactly the same thing, literally the same.
Yeah, you've got to look and have some crossover there, but Coho won't. Coho's more geared to HMO tenants. So I use both. You can use OpenRent for HMO tenants, but it's a bit more, more tricky, yeah. I've got